Welcome back. Before we look at what's making the business headlines around the world today, let's look at the various currencies, followed by the price of oil and commodities. The S&P 500 posted its third straight week of gains on Friday, lifted by optimism before the summit of European leaders and strong earnings from blue-chip stocks. US stocks rose in a broad rally to their highest levels since early August after a volatile week. With 2 EU summits to solve Europe's debt crisis scheduled for next week, investors took an optimistic view that a resolution will soon be reached. For the week, the Dow was up 1.3% and the S&P rose 1.1%, but the Nasdaq fell 1.1%. On the New York Stock Exchange, about 8 stocks rose for every 1 that fell. On the Nasdaq, advances beat decliners by a ratio of about 4-to-1.
Equities were rallying pretty much the bulk of the week on strong earnings reports and a few surprise economic data regarding housing and the Philadelphia Fed number, which came out earlier in the week.
Eurogroup finance ministers on Friday agreed to release €8 billion of support to Greece, the latest tranche of €110 billion of loans agreed by the EU IMF last year. Without the payment, Greece faced default, sending shockwaves through the European banking system. The agreement came despite an EU and IMF analysis saying a greater haircut would be needed to get Greece debts below 110%. Finance ministers also discussed the thorny issue of how to leverage the zone's $440 billion bailout fund. Leaders will now meet twice, on Sunday and Wednesday, to try to adopt a comprehensive strategy to fight the crisis. And staying in Europe, new data from Munich-based economic think tank IFO shows that business morale in Germany has dropped for the 4th month in a row to its lowest level since mid-2010. The news is compounding fears that Europe's most robust economy is heading for a sharp slowdown, but the IFO survey coordinator stated there would not be a recession but a cooling period. IFO economists have called on the European Central Bank to cut its key interest rate to 1%. Germany proved resilient following the 2008 economic crisis as a vital growth engine for Europe. But data is increasingly suggesting a combination of global slowdown and the Eurozone's troubles has led to output orders and retail sales to slump.
Businesses and also we share this outlook. We reckon with around 0.8% GDP growth next year. So this is really a strong cooling compared with this year where we have almost 3% or so 2.8% or something like that.
The International Monetary Fund has forecast a rosy outlook for sub-Saharan African growth in 2012, but have warned of significant risks from global financial volatility that could subdue demand and private inflows. Economies in the region are expected to post nearly 6% average economic growth in 2012, rising from above 5% this year, according to the IMF, pointing to a better outlook than advanced economies. Speaking at a media conference, the director of the IMF Africa Department urged policymakers in the continent to formulate policies which take into account the projected strong growth as well as emerging challenges from the global financial problems. At the same time, sub-Saharan Africa needs to continue to invest in growth and employment, which are critical for sustained poverty reduction.
We are concerned that inflationary pressures are taking hold in a number of East African countries, and that needs to be dealt with urgently. And we're still quite positive that Africa can sustain its growth that it's seen in the last decade or more. But there's certainly urgent actions individual governments need to take to be able to make sure they're on that sustained path. But Africa's prospects are still very positive.
Up next, we have the day's sports news for you, so stay with us.